Hi, I'm Sarah Lacy. Welcome back to TechCrunch TV. We are down at the offices of Bullpen Capital, and we want to talk a little bit with you guys about sectors that you're looking at. We talked about stage and things like that in an earlier segment. I assume because you're talking about playing in this more capital efficient part of venture that you're really focusing on consumer internet mobile deals, but do you think this is something that expands beyond that?
Yes. So let me just start off. Our deal flow comes from the super angels, so to a great extent it'll follow what their portfolios look like. But we get the luxury of rebalancing our portfolio where we think the market's going. So our first deal, the Sicily, is a great example of this. One of our investment theses is the consumerization of the enterprise. And Sicily is an example of how that might look. Everybody thinks enterprise, you've got to sell to the IT department, it's a pain in the butt, it takes forever, they have no budget. But if you look at the history, all the great things that got into the enterprise went in through the back door. PCs were bought by departments. There was a year of the land for 10 years till IT got control of it. Right now, the consumerization of the enterprise means a whole bunch of new applications that get sold to departments and not have to go through IT. And that's particularly going to get pushed by tablets and mobile devices, et cetera. So we're going to rebalance some of what we're seeing come at us toward mobile enterprise, social enterprise, whatever buzzword you'll probably put on it, right? So that's an example. You guys each have your own, so here we go.
Yeah, and to take that to the next extent too, we've spent a lot of time talking about what we think is, to use Tim Chang's phrase, the gamification of enterprise as well. One of Tim's recent investments at Norwest is in a great company that a friend of ours named Rick runs called Branch Out. Gamification techniques being applied to the job search and job hiring process. And we're very involved, of course, with several of the people involved at Zynga. I'm one of the original investors in Zynga. I previously started Tribe with Mark Pincus. And when you take a look at the kind of truly groundbreaking understanding that a company like Zynga has around human behavior, not just around game mechanics, but human behavior, they could write treatises on human psychology, the people at Zynga who are really good.
Probably.
Right, but they really know what motivates people. And Tim over at Norwest, he uses the phrase, the 7 deadly sins. Your game has to apply to one of the 7 deadly sins, and which one is it? Is it vanity? Is it pride? But the idea of all of that learning and all of those great UI licks and all of those great web services tricks now being brought out of the realm of games and into an enterprise setting where it's a contest to see whose machine can get configured first. It's a contest or a game in which we determine who's best at generating leads for the company, right? And I think that's going to be a trend that continues to be in this area. And while certain aspects of the consumer and mobile side may have been overinvested, those techniques are now being applied into these markets that are going to have tremendous value. Rich?
If you think about what's been happening on the video space, it's interesting. Video's in a bit of a it's kind of a bad boy now in the venture business because there's been so many deals that have attempted to duplicate some of the early successes, YouTube, Hulu, and so forth. Those haven't been successful, particularly. And so I think the word up and down Sandhill is video is not such a good idea now. In my view, one of the over-horizon things that'll come still hasn't really appeared yet, and it's a little tough to figure exactly how to play it, but we see that eventually there'll be this huge overturning of the whole media world. And in that overturning, great new companies will arise, and it's enormously complicated because it ties to the entire economy. If you think about video, the entire advertising world depends on people looking at television in order to fund all of the launching and consumer economy that we have. And if you look at the movie industry and the TV industry and the entire video content industry, these things are all wrapped together in such a complicated way. It's very difficult to understand exactly how some little startup that's in a garage someplace that we haven't heard of is going to make a big impact on this. But if history is any guide, we know that, in fact, the major players today who are thinking content is king and we're going to control this forever are probably wrong.
The whole TV advertising business is at risk. I heard a fantastic story, I don't know if it's true, but that Procter & Gamble has decided to not advertise on soap operas, which they invented, but advertise in social media. Because his good buddy over at Zynga, Mark Pincus, has moved the people in the afternoon from viewing TV to playing Farmville and Cityville. This is huge. So the movement of ads off TV onto something else may not look like the same ad on Hulu. It may look like a game on Zynga. So what we are really thinking of is how the disruption will actually occur and what type of businesses will help redo the whole marketing media complex and military-industrial complex of our time, right? How will people redo that, and how will the money move? Groupon's a great example. Came out of nowhere for many people, and look at that thing. In some ways, I think the reason why Kleiner put money is I think it might be bigger than Google. They're right, they're wrong, we don't know yet. But we do know this is a change in behavior that is absolutely huge in this marketing media complex. So we're going to play there a lot. Both these guys have a lot of experience in that category, and part of my past life is also involved in that category.
Now I want to ask you one last question about enterprise, just to get back to that. You know, you're talking about consumerization of enterprise and all these issues, which are, you know, absolutely true, and yet my friend down the road, Ben Horowitz, would say, still takes a big sales force. You still got to sell to the IT person if you want to build a big company. At some point, those laws of building enterprise software companies still apply. Do you think that's true? There
is no question about that. And one of our co-investors in Assistly is a guy named Kenny Van Sant, who came out of SolarWinds. And what he learned at SolarWinds was that you needed to spend more money on instrumenting the site so that self-service offerings could get the customer to identify themselves. So some of the most innovative work that Kenny did was making the website itself instrument who they were when they came in the front door so that the salespeople were informed about what the questions were, getting them to immediately get to the key buying activities. This again is that same idea of the consumerization of the enterprise. In this case, it was the consumerization of the sales lead process. We're hoping that that's the kind of technique that can get applied not just to Assistly, but others in the category. Now, there's no question, once you get to a certain point and you decide that you're going to go and build a sales force of X people, there's time to go raise that money. But our view is you should not raise that money until you've de-risked the base case.